Hey everybody, welcome to Mortgage Today for Monday, October 28th, 2024, and oh, what a day it was. UMBS were in the red again to open the day down 6 basis points bright and early this morning. Stock futures were up 22.5 points. No real economic data in the morning. You would think that the rising escalations in the Middle East would drive a flight to safety, but nope, didn't happen. Bond yields continue to work their way higher, presumably in anticipation of a Trump victory next week. I guess the betting is that Trump will be a bit more pro-growth, and his push towards increased tariffs will be inflationary at the margin. The Wall Street Journal has a piece this morning warning about Trump and inflation. Put them all together, these levers are moving more in the inflationary direction. I'm legitimately worried about inflation worsening in 2025, said Brian Riedel, a former Republican Senate aide now at the conservative Manhattan Institute. Riedel said, talking about Trump's plans to increase tariffs, probably a valid reason, increase deportations, probably won't matter, and to jawbone the Fed into cutting rates, probably won't matter either. But regardless, the bond market is selling off in anticipation of a Trump victory. For housing, a Trump victory will bring privatization of the GSEs, or at least talk about it, back into the discussion, and the government still holds nearly 80% of the GSEs and sweeps all profit to the Treasury. The November Fed funds futures are pretty much locked in for another 25 basis point cut next week. All cash sales fell to 7.9% of new home sales in the third quarter. As mortgage rates have begun to move lower, we are seeing fewer cash sales. Part of the issue is that home builders with mortgage arms have been offering discounted mortgage rates in lieu of price cuts in order to drive volume. The markets rose at the start of a pivotal week marked by corporate earnings, economic data, and the anticipation of the upcoming U.S. election, while most sectors of the S&P 500 climbed. Energy shares lagged due to the falling oil prices. Notably, airlines and cryptocurrency companies, and particularly Bitcoin, surged. Trump media and technology groups saw a notable rise, coinciding with increased betting odds on a Trump return to the White House, which is seen as favorable for stocks and Bitcoin. Market sentiment remained optimistic despite pre-election volatility, with no major 1% swings in the S&P 500, making this October unique compared to previous election years. Analysts are closely watching the busy earnings reports and economic data could drive bond market with the upcoming election news. Meanwhile, bonds sold off amid the concerns around Treasury auctions, pre-election positioning, and with little direct correlation to major data releases. UMBS closed the day down 25 basis points at 98.99. We're so far off of any trend charts, there's no reason to even look at them. We also got news from the NBA today. Mortgage market could improve to $1.3 trillion in 2025. The most challenging period in the mortgage industry appears to be in the rearview mirror, as the Mortgage Bankers Association forecasts $2.3 trillion in origination volume in 2025, presently presenting a robust 28.5% growth over 2024. We are in a better place now than a year ago. Let's keep in mind that we look at this data looking at originations. Forecasted trajectory is up. It certainly is a purchase market, but a return to refis. It certainly is a purchase market, not a return to refis. That's not going to be easy, but again, we are heading in the right direction. Purchase origination are forecast to increase to $1.45 trillion in 2025, up 13% year over year. Meanwhile, the 30-year fixed mortgage rates projected to decline from an average of 6.3% in 2024 to 5.9% in 2025. Refis are estimated to represent 37% of volume next year, increasing from 28% this year.